Morning traders, and welcome to Price Action GPS. I am the Market Surfer here with your morning report for October 8th, 2023. My life schedule has been very hectic, so it's been, I wouldn't say hard getting videos out, but hard getting videos out that are actually of good content. I could just make videos and show you charts, but with the chaos going on in the world, I'm trying to see when the changing of the guard happens. I'm trying to connect the dots and see when the change is going to come, whether it's collapsing down or going up. But we're at a period where we're at levels where it can go either way, but something major is going to happen. And I figured I'd do it this morning because it's easier on the weekends for me to do this, especially after what just happened in Israel. The last video I put out said what's going to be the catalyst, and I don't know if that war would be the catalyst. I think more along the lines of Japan selling off the bonds and treasuries. So this is from August 16th, 2023, and this is all about Japan. Their net purchases of medium to long-term U.S. debt instruments reached 13.6 trillion yen, $93 billion, during the first half, and a record for a 6-month period since 2014, according to data from Japan's finance ministry. They're going to have to start selling these soon because they need dollars. Anyone who holds the bonds, treasuries, whatever asset most large institutions have, I believe they're going to start selling off for dollars. I think everyone starts to realize that, what do they say, longer or higher for longer for the interest rate? I believe that's here. And I'm going to put this in the show notes so I don't read over it and bore you. But it will be in there. But I'm just worried about them selling that to secure their yen, because the yen has really taken a hit. So this week's economic calendar, I would say wholesale inventories, that's going to matter. Because if wholesale inventories are through the roof and consumer spending has stopped, then the market would probably really fall after that because the consumers aren't spending. Core PPI, producer price index. And next week, there's a lot going on, not just initial jobless claims and things like that, but what people are spending, how they're spending, and wholesale inventories. So think of supply chains. And someone taught me this in early 2000s when Apple was making whatever they make, iPads, iPhones. You go to the suppliers that make these things for them. As long as those suppliers are buying the necessary pieces to assemble the iPhone or iPad, then Apple will be doing good because they're ordering enough to keep that company busy. But when that company starts slowing down, that means Apple's orders have slowed down. So therefore, Apple's next round of, I wouldn't say profitability, but their numbers are going to be skewed, and that could cause the stock to go down. So when it comes to fundamentals, that's how I was taught to look at the supply chain for manufacturing, whether or not you want to buy or sell the specific investment. Apple, IBM, any of those type of companies. Sorry, I had to take a little tea. So that's next week. I'm more concerned. Like I said, the news is the news. When the investors or the smart money starts changing what they do with their money, then it becomes news. So I don't necessarily think, and MSNBC or CNBC or anyone's going to tell me what's going on. I just want to show you. Here's the T-bond futures, and we are down to October of 2007 levels. So you take it for what you want. Are we holding here and then these are going to take off again, which means interest rates are going to drop? It could be. Here's the 30-year. I expect that to top out right there, come back down to here. But here's the caveat to what I'm saying. I do expect this to drop down to here. But what happens after that, we don't know. Higher for longer could be a real thing. Because if we go back to this, Monthly. What else can we look at? The ES. I don't know. None of them really correlate with the bonds and stuff. Where are we at? Where's October of '07? Right there. So October of '07 was a high, and then we had the catastrophic crash, and then it took off. So why? Not saying this can't be different, but why would it? Expect a serious crash of the market for 5 months, 6 months, and then next spring, March, April, whatever changes they make. Or maybe it could take longer. Obviously, I'm speculating, but we are at a reflection point. October of '07 was right here. That was a high of the market. And our market isn't at highs right now. Either is our dollar, for that matter. Like, this should probably fail back down to support. And then from there, I'm looking at the dollar going to about 115. That's why it's higher for longer. How else will the American government or American financial institutions get the money for all these projects they want? The borrowing is done. They're going to make it very fruitful for the average working person to buy bonds. All the banks, if there's any banks left after this, all corporations, everyone, it's going to be akin to World War II war bonds. But we're going to have, infrastructure bonds or tokens. They'll tokenize them. They won't be bonds anymore. That'll be a way for people to trade and gather money so we can have this reset. No one knows what's going on. We're all speculating. Finance is so complicated when it comes down to what these guys are doing, but they're all natural laws. You know what I mean? Things have to balance out. And still going back to the 2008 financial crisis, I would say the TARP, the $800 billion bailout that ended up being $29 trillion, that I believed caused quadrillions of dollars in derivatives, I think that's going to fall apart. That falls apart, makes the dollar stronger anyway because the loans evaporate. They call them liabilities. They're assets on their books. They evaporate, the dollar gets stronger. There's more dollars to go. There's more dollar purchasing power because there's less dollars in circulation. So that's how I'm looking at the market. Once again, this T-bond futures is very important. Everyone's been selling. They need cash. Everyone's been selling. So is this going to bounce and go to new highs? I mean, we don't know. But once again, October the 13th is next Friday. And unfortunately, I'm a cynic, and I believe that's the day when bad things can happen. Here's the euro-dollar market. That has fallen apart. That's what I'm saying. That is some serious movement from 18th of 23 to now. That's some serious movement in 6 months or 4 months. What else? Look at that. That's just a beautiful Elliott wave 5 that fails. That would be the low, but the 600 period moving average could hold it up. But I think once we get to these lows, everything reassess, and this is where the change happens, and then higher for longer is it. And I don't think the stocks really matter right now. Everyone's just looking for a flight to safety. But PayPal's, I don't know whether there's a short covering coming up, but this is blowing out of that to that. That's a $100 trade. Are they going to tokenize something? I don't know. Generac, Apple. I mean, Apple could rally, close that gap. Hanesbrand, 327 is probably the wait for that. Yeah. Sorry, I'm skimming through these because I'm more interested in trying to figure out what's going to happen and what's going on. So I wouldn't trust anything in the market because look at what just happened in Israel, which of course is going to lead to Iran because I'm sure Iran had something to do with Hamas, and it's just going to get really long. And So we should have seen this coming because there's no money for Ukraine, so they need something that we can all agree on to spend money on. And that most likely will be it. So let's go back to the dollar and go back to a monthly chart. And if this was the bottom, we held support here, coming up to resistance there. But in this area, looks like, let's see, when was it bottom? 08. So look at that. Look at how strong the dollar was in 85. So I think we're going back to those levels. We went from there to the bottom here, and we're heading back up to there. Could be. I'd say we're at least getting up to these levels. And then this could take years. It's a monthly chart. This could take 10 years for this thing to get over to the side here and then bounce out of there, which is more likely what's going to happen because demographically, by 2028 to 2032, there's enough workers in Gen Z, Gen Y, and Gen X, and all the boomers are gone. So all three of those generations combined is more than the baby boom generation, if I'm not mistaken, as long as there's jobs there. So I think the political climate would be Republican sweep. Republicans aren't the Republicans of the past, so forget about Republican, Democrat. The drill, baby, drill, and go to war with cartel and protect Israel will get in, and we will make bombs, drones. We will drill for oil and natural gas and sell it to the world, and that's where everyone goes to work, and then they will all buy government bonds, and the money stays in the system like a nationalist system. But that's better for the working class. I'm not agreeing or disagreeing with anything. I'm just saying this is the points or all the dots that I'm connecting, that's what it's pointing to. So if this is wave 1, we come down here for wave 2, hold here by 2028, and then from there on, we take off. Just speculation. Bitcoin, I don't know what's going to happen to Bitcoin. I honestly don't know. Is it a good thing? Is it a bad thing? I would say, as of right now, it's a great store of value. It's probably digital gold. Still, I'm not agreeing or disagreeing on anything. But if it's digital gold, then 11,000. I don't know if we get down to 11,000, but 17,000. Because it already went down to the 14,000 mark. That to me was it. I'm just expecting another, head and shoulders. There's a shoulder, here's a head, another shoulder here. This may just get long and drawn out to there and then break out, take off to new highs. But we're past the 10-year mark for Bitcoin. We're in the second 10 years. So let's see how that plays out. And during the next crash, all that could play into the Bitcoin. Could all play into, are we going to use that? Are we going to back it with something? Are we going to bounce? Are we going to tokenize everything else to compete with Bitcoin? I would say the next 6 months will give us a good idea of all of that. So once again, I want to thank everyone for tuning in. This is a Value for Value endeavor. Once again, my man, Sir Alex, has a wonderful No Agenda tube that I get to put my videos on and never have to worry about anyone taking them down. Of course, I put them on YouTube as well for my friends and family who are not on the No Agenda tube. And everyone else, if you're interested in hearing anything else I have to say, you can always download a modern podcast app at podcastapps.com. And that is the Podcasting 2.0 community. And they have wonderful little apps. You could send boostergrams through the Lightning Network, which is Bitcoin or whatever else you want to use. But that is how they do things there, and that is pretty much who helps me with all this stuff. I'm just a technical trader. I am not a tech guy who knows how to do all this. So they help me, and I just say thanks to them. Let people know that that's who helps me. So once again, you can see us there. Check us out. Give us a boost, a like, a thumbs up. We just appreciate your feedback. Once again, everyone, thanks. Have a great weekend, and stay safe and effective.